Welcome, everyone. In this new chapter, we'll be diving into an exciting expansion of the order-to-cash process, service sales. Unlike product sales that involve inventory movements, service sales focus purely on delivering value without the physical transfer of goods. This means that although the steps may seem familiar, the financial and operational flow has unique characteristics tailored for services. We'll explore how the system handles service-related orders, from creation to billing, ensuring transparency and accuracy at every step. Whether it's consulting hours, training packages, or maintenance services, the process will showcase how to track, price, and post revenue effectively for non-stock-related transactions. Let's get ready to explore how service sales integrates seamlessly into the company's financial performance. Ready? Let's dive into the world of service sales and see how this complements what we've learned about stock product sales.
Welcome to the order-to-cash processing section of the system. This dashboard provides quick access to various sales processes. The highlighted tile, Manage Sales Orders, shows 674 active orders, giving an overview of current operations. Let's proceed by selecting this option to explore and create a new sales order for a service. At this stage, we navigate to the Manage Sales Orders screen within the order-to-cash process. This interface allows us to access, view, and manage existing sales orders. The focus here will be to initiate the creation of a new sales order specifically for selling services. In this step, we navigate within the Manage Sales Orders interface and select the option to create sales order from the drop-down menu. This initiates the process of creating a new sales order, guiding us to the next step where we define the details of the order. Here, the system displays the fields to define key parameters for the sales order. These include selecting the sales order type, sales organization, distribution channel, and division. Once all the required fields are populated, we confirm the details by clicking Continue. In this step, we proceed to the main New Sales Order screen. Here we begin by entering the relevant order details, such as the sold-to-party customer, document date, and any additional required fields. As we input the customer information in the sold-to-party field, the system displays a drop-down list of matching customer records. We select the appropriate customer from the list, ensuring that the sales order is associated with the correct client. This confirmation allows us to move forward with item entry. At this stage, the system has successfully retrieved customer details, and we proceed to populate additional fields in the sales order header. Key information, such as order reference and requested delivery date, is entered to ensure that the sales order meets the specific requirements for this transaction. This information prepares the order for item entry. After completing the header information, we move to the Sales Order Items section to define the products or services being sold. In this view, we can input details such as the product or service ID, required quantity, and other relevant data to specify the order line items. This step connects the general sales order details with the actual deliverables. In this step, we enter the product code corresponding to the service being sold. As we type Serve001, the system provides a drop-down with matching results. We select the correct service item, Service 001, to add it to the sales order. This ensures accuracy and alignment with the catalog of available services. Once the service item is selected, the system displays its description and unit of measure in the Sales Order Items section. Here, we confirm that the item details are correct before proceeding. This step is crucial to ensure the sales order aligns with the customer's requirements and the organization's service specifications. In this step, we enter the quantity of the service to be sold. Here, 10 days is entered as the requested quantity, indicating the duration of the service. This input ensures that the service details align with the customer's requirements and prepares the order for price calculation. The system now calculates the total value for the service based on the quantity and unit price. The net value field displays the final price as €20,000. This confirmation step ensures the pricing aligns with expectations before proceeding to save the sales order. In this step, the price element section is displayed, where we can analyze the breakdown of pricing components for the sales order. The base price for the service is listed as €20,000, and taxes such as VAT at 10% bring the total to €22,000. These values represent the agreed amounts for the sales order. However, they will only become effective upon invoicing, which is the next step in the process. The distinction here is important. The sales order records the negotiated terms and conditions, while the invoice finalizes these values and formally records them for financial and accounts receivable purposes. To finalize the sales order, we review all details for correctness, including pricing and tax elements. Once satisfied, we proceed by clicking the Create button at the bottom right corner. This action completes the creation process and saves the sales order in the system. In this step, the system confirms that the sales order for the service has been successfully saved. You can observe the sales order number displayed in the top left corner, serving as a reference for this transaction. After saving the sales order, we return to the main menu. This step prepares us to move on to the next phase, where we will locate and process the corresponding billing document. At this stage, the system is ready to support the continuation of the process by navigating through the order-to-cash processing options. In this step, we utilize the search functionality to locate the Create Billing Documents application. By entering the relevant term in the search bar, the system promptly provides suggestions, allowing us to select the correct application to proceed with the billing process. Here, the system displays the Create Billing Documents screen. By entering the sold-to-party, which in this case is Customer 001, the system automatically proposes the relevant sales document, Sales Order 1122. Since this is a service sale, no picking or goods issue is required, and we proceed directly to billing based on the reference sales order. In this step, we identify the sales order from the Billing Due List Items section. The system displays the Sales Order 1122 with all the associated details, such as the sold-to-party, billing date, and net value. We select this item to proceed with the billing process. With the relevant sales order selected, we now proceed by clicking on the Create Billing Documents button. This action initiates the billing process for the selected sales order, generating the corresponding invoice for the customer. In this step, the temporary invoice data is displayed, providing an overview of the invoice details. The upper section highlights key information, including the temporary invoice number, billing date, net value of €20,000, and tax amount of €2,000. The bottom section details the items included in the invoice, specifying the service, quantity, and associated values. Here, we navigate to the Accounting Data tab to examine the invoices integration into the process flow. This section visually represents the progression from the sales order, Order 1122, to the invoice creation stage. The process flow confirms that the invoice is in the plan stage with a temporary number, reflecting its connection to the preceding sales order. To finalize the invoice, we select the Save button, as highlighted in this figure. This action converts the temporary invoice into a finalized billing document, ensuring it is ready for further processing or posting. Once saved, the invoice will receive a definitive document number, completing the billing cycle for the sales order. At this stage, the process flow now reflects the completion of the invoicing step. The invoice, identified by the document number 9000219, has been successfully created and shows the status as completed. This is visible alongside the sales order, 1122, under the order processing section. The flow also indicates the pending accounting step required to finalize the process. This graphical representation provides clarity on the sequence of actions and the current status of each document. Here, the accounting step is now included in the process flow, signifying that the journal entry has been created. The document number 18000000595 is displayed under the accounting section. This step marks the link between the sales and financial records, showing that the revenue and tax values from the invoice have been posted to the respective financial accounts. The system ensures traceability of each step for reconciliation and reporting purposes. To review the financial details of the journal entry, we navigate to the Manage Journal Entries option within the accounting step. By selecting this link, users can view the detailed postings associated with the invoice, including the revenue, tax, and accounts receivable entries. In this figure, we examine the journal entry details resulting from the billing document. The screen provides a breakdown of the accounting entries, including debit and credit postings to the relevant general ledger accounts. The primary postings include the accounts receivable account debited with €22,000, representing the total amount to be received from the customer. The revenue account is credited with €20,000, corresponding to the service provided, and the output tax account is credited with €2,000, reflecting the 10% VAT. These postings ensure that the total credits match the total debits, balancing the transaction. This entry is tied to the profit center associated with the transaction, ensuring accurate profitability reporting. This figure highlights the T account view, providing a visual summary of the accounting impact. Here you can see that the debit entry for the accounts receivable aligns with the credit entries for revenue and tax, confirming that the transaction is fully balanced. This view provides a clear overview of the financial flow and serves as the final check for the accuracy of the journal entry, demonstrating that the invoicing process has been correctly reflected in the financial system. In this figure, we are returning to the trial balance to view the consolidated values after the billing document was created. In this initial view, we analyze the trial balance prior to the update with the most recent billing transaction. The key values are: accounts receivable, €2,200. Output tax, €200. Revenue account, €2,000. These values represent the entries related to the previous product sale, providing a clear baseline for understanding the balances before any adjustments. After refreshing the trial balance data to include the most recent billing transaction, the following values were added. Accounts receivable, €24,200, composed of €2,200 from the previous product sale plus €22,000 from the service sale. Output tax, €2,200, composed of €200 from the previous product sale plus €2,000 from the service sale. Revenue account, €22,000, composed of €2,000 from the previous product sale plus €20,000 from the service sale. This figure highlights the updated balances, clearly differentiating the contributions from the two transactions, product sale and service sale, and showcases the complete financial impact of the recent billing transaction on the organization's ledger.
To close this unit, let's recap everything we've covered. In this chapter, we explored the full life cycle of a service sale, beginning with the creation of the sales order. We detailed how to enter the customer's information, define key parameters such as the service type, quantity, and pricing, and confirm the order to proceed seamlessly within the system. We then moved to the billing process, where we saw how the system generates the billing document directly from the service sales order. Since this was a service sale, no inventory movement was required, only the financial entries, including accounts receivable, revenue, and taxes. We examined how the system calculated the total price, including the base service value and applicable taxes, and how it updated the system with the finalized billing document. Additionally, we reviewed the financial impact by analyzing the journal entry, observing how the system automatically posts the corresponding debit and credit entries, ensuring alignment in the general ledger. This provided us with a comprehensive view of how service sales transactions reflect in the company's financial reports. In summary, this unit demonstrated the end-to-end process for recording service sales, from the initial sales order creation to financial reconciliation, highlighting the importance of accuracy and completeness in financial postings. In the next unit, we'll focus on accounts receivable. We'll learn how to review open items, manage outstanding invoices, and process incoming payments to ensure that receivables are cleared efficiently. This step is essential for maintaining accurate financial records and ensuring the company's cash flow remains robust. Let's get ready to dive into this important process.